Guys, welcome back to the lecture. In this video, we're going to be learning why Wyckoff works everywhere. Okay, universal principles and universal success. Okay, so we are going to be applying the Wyckoff methods, the trading truth principles that I taught you guys in all of the market. Okay, whether it's crypto, stocks, forex, pick take your pick. It's like it's gonna work anywhere. That's my claim, and let's prove it. Okay, so the question everyone asks is, does Wyckoff work on stocks, crypto, or forex? I mean, like, if you go on internet right now and search, does uh, the same question, and like, people might have different response, but like, Wyckoff is not like some sort of strategy or something. It's like Wyckoff actually gave three laws. Okay, law of supply versus demand, law of effort versus result, law of cause versus effect, and this law is consistent throughout nature. Okay, just remember Newton's three laws of motion. I mean, where does it come from? Uh, so that's why Wyckoff works. This method, the trading truth principle that I'm teaching you guys, it works everywhere. Okay, anywhere in the market. All right, even in 1 second time frame. Even like yesterday, I actually uploaded one video. About SpaceX IPO. And interesting thing is that like the SpaceX IPO got released, so there wasn't much trading data. So I applied it on 1 second time frame, and it was working really well. Okay, let me actually show it to you guys. Um, SPCX, yeah, see Space Exploration Technologies got. So see, on 1 hour there's not much data, right? But as I move to suppose 1 minute, there's data. You see, markdown phase, right? Now, as I move on to suppose 50 second, then you can see time frame changes, right? Now, like you can see how it goes. I actually applied it to 1 second time frame, and you can see how it's working so beautifully, man. Like, yeah, accumulation, then reaccumulation, market goes up, and this is a 1 second chart, guys. All right, you see, right? So see this big distribution that's going on coming from there, right? Right there, redistribution. So it does work on all time frame, all market that you have, whether it's crypto, you know, anything basically. All right. So yes, it does works on all of them. Okay. Let's move on. And why does it works universally? You might be asking, like, why is this case? So as I told you, right, Wyckoff isn't about the market itself. Okay, it's about human psychology and institutional behavior. That's those laws of nature that I told you. Okay, and it's universal. All right. Now let's take Bitcoin example. All right. So as you see, this is the chart of Bitcoin. You can see it's in downtrending, right? So price was in downtrend, went sideways, volume decline, broke out, Wyckoff accumulation, pure and simple. You can see that. See, on 1 hour, 4 hour, it's in downtrend. So this could very well be redistribution or an accumulation. But what we are noticing here is that what we are noticing here is the test of this, support levels, right? And the market goes up, breakout, pulls back, then it goes up again. All right. Uh, yeah. So, um, so this is pure and simple Wyckoff accumulation. Okay. Now, accumulation leads to breakout. Okay. And what the institutions are doing there is that whales, exchanges, big players, all they are accumulating the same way. Okay, they still live the same tracks. Okay, because volume is the same. All right, whether it's institutions or retail traders or anywhere for that matter. Okay, anyone. Yeah. So stock market example, let's take stock market example. Okay, I actually applied it on SpaceX, so let me actually apply it on SPX, you know, and show you there as well. See, distribution, market comes down, distributes, makes lower high, lower high, lower low, and the volume got increased there, right? You see, distribution, now it accumulated there because it breaks out, pulls back, and then it's going there. Okay, so same pattern, downtrend, sideways. You see, like, I mean, here it's making, just making higher high, higher lows. But you can see the breakout there. Okay, volume declining. On down wave, volume should decline, right? Up wave, volume is greater. So, and the breakout happens there. So the same Wyckoff accumulation applies here as well. Okay. So in the case of stocks, S&P 500 or other index and stuff, the big players, the institutions, are the pension funds, the hedge funds, the mutual funds, and different players, but the same behavior. Okay, they all have the same behavior. All right, they're accumulating and distributing. All right. So forex example, let's take Euro USD. Okay, I think I have it on second. Yeah. So the same case here as well. See, as the 4 hour price cycle was coming down, all these were your redistribution, and you can see the range after a move, volume patterns break out. I mean, it's talking about this accumulation one here. You see, after the range, this breakout, right? But there's also example of distribution as well. You can see, okay. So yeah. All right, so Wyckoff works here too as well. You see all these, like, higher high volume is way higher on the, while volume wave is way higher on the upside than the down wave, and the market just goes up and then it pulls back. After that, you can see markup is this green line there, price cycle, right? When it turns red, market distributes there, markdown phase, basically redistribution. I mean, the distribution phase was going on, and then when the real markdown phase started, market just keeps going down, right? So basically, Wyckoff works here too as well. So in this case, in the case of Euro USD, you can see Euro USD. The institutions here are the central banks, commercial banks, hedge funds, and again, different players, but the same behavior that I'm teaching you guys, okay, to see. And you can apply it on, I'm telling you guys, like, you can apply it on any time frame, okay? It works the same, all right? So let's continue. So the three universal reasons why this is the case is that, first of all, the human psychology, okay, the human psychology is universal. All right, so fear and greed, they work the same way in all the markets. All right, so when there's a fear, the institutions buy. Okay, when there's a greed, the institutions sell. And you can see that. Okay, when there's greed, people are buying, institutions are selling there, you see. So this might very well be a distribution structure. And when the price, see, you can see the volume is increasing on down wave. It's not much more than this one. So as it goes down and it increases, then we can confirm that, okay, like the case of here, you see, very big down wave, market pulls back up but still goes down, right? Because this is what it's controlling it, and like there's a lot of resistance that it's taking on that supply zone, right? So um, second reason is that institutional behavior is universal. All right, large players can trade instantly, okay, or anywhere. They have to accumulate gradually. All right, they have to accumulate gradually. Okay, you see, gradually, and then they have to distribute gradually around here. You see, gradually distributing, then they are taking it down. So this is your big price structure. You can see 4 hour distributing, reaccumulation, then markup phase, distribution phase, then markdown phase. All right. So, and the same constraints apply everywhere that that I've shown you guys. All right. So first is human psychology is universal. That's why Wyckoff works everywhere. Second is institutional behavior is universal. All right, because you can see it like I don't need to explain it further. Uh, yeah. So they have to accumulate gradually and they have to distribute gradually. All right. Now, the third universal reason is that the supply and demand works same everywhere. Okay. The fundamental law never changes. All right. This is the law of the nature. All right. So the demand exceeds supply, price must go up. Okay. When the supply exceeds demand, all right, the price goes down. And this is true in everywhere, in every market, in any time frame. And yeah, so by supply and demand here, they mean is the volume, wave of the volume. You see the wave here, demand increases, market just goes down a little bit, but still the wave, the demand prevails and it goes up. All right. You see here, uh, the volume on this one was much larger there on the downside, right? So here you see start of the move there, big selling, right? So this is the third universal reason that I'm teaching you guys, why does Wyckoff works everywhere. Okay, and I call it trading truth principle, trading truth concepts. Okay, so crypto market nonsense. So what's the difference between different market is that crypto market trades 24/7, 365, and there's no market close. Okay, so accumulation and distribution can happen faster and cycles are compressed, but the phases are still the same. All right. So let me actually put the uh, Bitcoin chart, for instance, and let me actually show you, see how clean this chart looks, as compared to the Forex one, right? See all this stuff, okay, but the phases are still there, and that we can see it. All right. Now, um, exchange specific volume is this, different exchange reports different volume. I mean, this is on Binance, but you can actually look at Bybit or other exchange. Volume might differ, but the concept is same. Okay, but the principles still apply: high volume at extremes and low volume in ranges. Okay, high volume at extremes, you see how the volume is increasing on the upwave, right? See how big upwave volume was there, right? I call it upwave because this is upwave. Okay, this is downwave, the red one. All right. So stock market nonsense is that the difference is within trading hours, where market has opening and closing times. Okay, so accumulation and distribution happen during market hours. All right. uh, After hours can create gaps, but Wyckoff patterns still form. Okay, so let me actually go to NVIDIA, you know and you can see it here, the pattern still forms. Okay, the market hours might be different. You see reaccumulation, market was up, distribution, market distributed there, this was your redistribution, because wave of the down wave was increasing. You see. So the fundamentals like earnings reports, news, sector rotation can accelerate or interpret patterns, but underlying structure is remaining same throughout the market, and that you can see it. Okay, see accumulation, market goes up, reaccumulation, just market goes up, distribution, market goes down on this, like big cycle. Okay, so this is the concept that you need to understand. All right, so let's actually take the example of Forex then. Okay, let's take different for this one, maybe GBP USD. Okay, British pound and USD. So what's the difference in Forex market is that it stays open 24/5, I mean 5 days a week. All right, it does stays open all week but closes on weekends. All right, so it's always open during the week, different sessions like London, New York, Asian, and they have tick volume, not the actual volume, but the principles apply same. Okay, see the volume is there. All right, tick volume, and high tick volume means activity lack, low tick volume is lack of interest. It's the same principle, guys. All right, okay, so sessions does matter here. Accumulation distribution can happen during a specific session. So if I go to 5 minutes chart, I can actually go back and look at the different accumulation distribution happening. So for instance, if this was your distribution, you see when the market goes up after accumulating, it finds resistance where the distribution is structured, the resistance of that one, right? Okay, so yeah, I think this will be a big accumulation zone. What about on 4 hour? It got distributed there. Uh, it got back into this accumulation zone, so it's bouncing out of this support. Yeah. So, universal application questions we might be asking is that when trading any market, ask yourself, okay, question one, what phase am I in right now? Okay, whether I'm in accumulation or markup or what's that, distribution or markdown. So, question two is that where is the composite operator? Where in this different phase that we discussed, where is that composite operator and what it's doing? Is he playing, or is he or collective market, are they playing the role of an institutional buyer, or are they playing the role of an institutional seller? Okay, now the third question you might be asking is that, like, what does volume tell me? It's like, is it confirming the phase that I'm in right now? So for instance, check it out, right here, there's this big downward volume. It's actually telling us that the distribution is happening. Okay, the institutions are playing a seller's role. Okay, so see, market does, dips down a little bit, goes back up, but it starts to shows its nature, the distribution nature, and the market makes lower high, lower lows, and then it converts to red, like, markdown phase. So is the walking volume confirming it? You damn right it does, right? You see, uh, volume is confirming because the selling volume is increasing, you see, and the buying volume is diminishing. So yes, it does confirm our analysis. Okay, so after distribution phase, right now it's in markdown phase that we can see there. Okay, around there, and now again it comes to the accumulation because it's basically in the accumulation zone that's this happening. Okay, so that's why, like, guys, like when you apply it in different market, per se Forex, gold, other stuff, interpreting this structure becomes a little bit challenging, but the principle is same, and that's what I'm going to teach you guys in this course. All right, so stay with me. All right. um, so the universal principle that I taught you, this never changes. Okay, which is institutions accumulate at bottom. Yes, they do. You see, this was the accumulation zone of these institutions. All right. Second is that institutions distribute at tops. You see, institution does distribute at tops. Okay, volume reveals their actions. Okay, you can see volume is revealing their action, whether selling is happening or buying is happening. All right, and the phases repeats in cycle. You see this cycle, right? Markdown, accumulation, markup, distribution, markdown. Okay, and most of all, very important, is the context does matter. Okay, all these analysis that we are doing, we are applying context to it, and that's why we are understanding whether it's in, accumulation phase, markup, distribution, or what's that? Yeah, markdown, right? So that's this phase that's going on, markdown phase. You see how it was, taking resistance or rejecting from this supply zone here, right? So yeah, so that's it for this section, guys. In module 6, you know we're gonna be deep we're gonna be learning about this in much more detail. Okay, I will teach you guys crypto specific applications, stock specific applications, and Forex specific applications, right? So crypto, you know um, Forex and all those stuff. All right. We will cover the specific nuances and how to adopt the Wyckoff methodology, or as I like to call it, the trading truth concepts into the market that we want to trade. Okay. So for now, if you can read Wyckoff patterns, you can trade any market. And I mean literally any market that I have shown you live, like you can see it, you can apply it to any time frame, any market. So I'll once you get access to this indicator, I highly recommend you guys just go through any, uh, you know, back in time, do your replay, okay, like that, and just after selecting, hit play and learn about the market. Okay, so what's next? So in the next lecture, I'm going to teach you how to set up TradingView and this Wyckoff indicator, the trading truth concept indicator that I'm going to be giving you access. Okay, for this access is going to be, yeah, I'm going to talk about it later on, but it's going to be around 6 months or maybe a year or something. I have to decide it, but yeah, so get your tools ready and let's start practicing, guys. All right. So yeah, trade any market, and universal principles mean universal success across all market. All right. So that's our universal edge. Okay, guys. So happy trading, and I'll see you guys in the next one. Thank you.